All right, guys, I'm back. I'm John Henderson with Revolution Mortgage. I'm sitting with
Ellis Wong, Remax Elite.
All right, and today we're just going to dive into a question that a lot of people have been asking is why are home prices so damn expensive right now? And we could get into an hour-long conversation about that, but we kind of just wanted to touch on the highlights of that. So, Ellis, you're a professional realtor here in Brevard County, Florida. Why are home prices so expensive?
Well, there's a million reasons why. I'm going to narrow it down to just a few and keep the politics out of it. So we are low inventory here in Brevard County. I don't know necessarily about other areas, but we still have thousands of people moving here for the space industry and all of our engineering that goes on. So we have a very low inventory, makes the houses higher demand. Then we have our new construction, which their costs are high as well because getting the materials from overseas to build these homes, all of those costs have gone up. So the new construction is high as well as the resale on the older homes.
So nationwide stats might be very different, but we live here in Brevard County, Florida, so we can only speak to, we're local. I'm a local lender, you're a local realtor. We really know our area. And I get asked this routinely, and I'm sure you do as well, is are home prices going to crash? Are they going to come down? Everybody asks me what the crystal ball says, right? And I wish I had that, but we can only work off of kind of what we see in our data here locally. What we see, honestly, just with our own two eyes, is we see development in Brevard County, right? We have a multitude of different aerospace, defense, space industries here that are bringing in jobs and infrastructure, essentially, right? So all of these things point to the idea that we're probably not going to see a crash or a lowering of prices, right?
Correct. I mean, anything can happen. Don't have the magic 8 ball that, has all the answers. But what we see here is, like John said, there's still people moving here for engineering and for the space, work in the space industry. That's not slowing down. So with the low inventory, our home prices are not going to crater. I think they're going to level off, which we've kind of seen that happen. There's this little bitty creeps, but not these huge jumps we were seeing.
The appreciation rate has slowed, right?
Yes, absolutely. But it's going to level off. We're not going to see a crash. We're not going to see these huge jumps. We're kind of just seeing a leveling off of prices. We do still see some homes where prices are being reduced, but most of those were greatly overpriced to begin with. So that is coming down, and people think, oh, well, prices are coming down. No, not across the board.
If you're priced right, it's still selling.
If you're priced correctly, you are still going to sell in Brevard County.
So from a home buyer standpoint, or even, we have clients that are investors, right? I just spoke to, I think, a client of yours that was looking to purchase an investment property and kind of asking me, is this a good investment still? And I admit my opinion, but I'd like to hear yours as well, just based on what you just said, as far as home prices retaining their value and kind of what we forecast here in our local economy as far as housing and everything like that.
So this particular client is trying to buy a rental property. So when he's looking at the rental properties, there's only X amount you can rent a home for in given areas. Those prices are not coming down either, because all of these people that are moving here while they're waiting on new construction or waiting to find a home, they still need a home to rent. So what plays into his purchase power, or anyone's purchase power on an investment property, is how much is it going to rent for? How much is the insurance going to be? Because that is killer, and taxes. So they have to put all that together and decide if it's still beneficial for them. In this market, I think you can absolutely still buy property as an investment property and rent it out long term. Anytime you're buying an investment property, though, you shouldn't look at it as a short-term solution.
Exactly.
It should be long term.
The cash flow needs to make sense on a month-to-month basis, but you should always plan for, you're not making the cash flow that you could have made maybe previously, with higher interest rates, right? You have to factor that into it.
Right.
But on a long enough time scale, especially here in Brevard County, I see that as still a sound investment.
And they have options there as well as far as refinancing later down the road. On the second home properties, they are able to refinance,
of course,
right?
Yeah, absolutely.
So, and what does that look like on refinancing? I've never done a refi for myself, so I mean, I've sent other people to you to
Yes.
have it done, but I've never done one. So
Yeah, so it's very streamlined. There's less paperwork that's involved than in your purchase. They're very quick, and you know, if the value of the home is appreciated, if you had PMI, for example, when you purchase the home, you can remove PMI through, you know, when you go to refinance, you can take cash out if you're an investor and you need to take cash out of the property to put it into a new purchase. So there's a bunch of different options. The most common is, you know, when you're purchasing a home, maybe in a higher interest rate market. Some people think that today, you know, we're in a higher interest rate market. If rates do come back down, you know, you can reduce your monthly payments and, you know, save money on interest by refinancing into a lower interest rate mortgage. So that's generally what happens. When rates are going to come down to a level where it makes sense to refinance if you're purchasing right now, not really sure. We're hoping for end of 2023, beginning 2024, we'll kind of see, you know, what happens. Recently, the most recent CPI index report came out for June, 3% inflation, which was great news. We're not going to see any direct impact in mortgage interest rates off of that alone. We still need it to come down, probably another percent. So we'll see what July's comes out at, crossing our fingers, and hopefully we can see those trends start coming down to lower interest rates. But right now, you just kind of have to deal with the higher home prices and the higher interest rates. And if it makes sense in the long term, I would say it's still a smart decision. If you're only gonna be living in the house for a year or so, if temporary, if you're moving around a lot, then maybe it doesn't make sense. Maybe it still makes sense to rent. Not sure. This brings up another question: is with interest rates being so high, there is significantly less people that can afford to buy a home, right? There's a large affordability in talking about higher home prices in the last couple of years. You know, the values of homes have appreciated significantly. So now you're dealing with home buyers that are wanting to purchase a home. It's expensive, higher interest rates. They kind of have to make significantly more money to afford these homes for any kind of traditional loans. However, what I've been telling people is that there are so many different loan programs and options out there that are not very well advertised. You know, you still get your average home buyer that still thinks you need 20% down and 700 credit score to buy a home. And that's not always the case. You know, there's a lot of lenders where that's all they can do. They have a small box of loan products, and if they don't fit in that box, they don't qualify. But there's other lenders, we're one of them, that offer a lot of creative financing solutions, whether it's down payment assistance programs or whatever we have to do, you know, bank statement loans, no income verification loans. You know, we have a myriad of different products that can help buyers get into the door into a new home. And like you talked about earlier, a lot of times this will allow you to get your foot in the door, and then you could always refinance into a traditional 30-year fixed, conventional, what have you, later on when rates do come back down. So definitely something I think that buyers need to consider, you know, if they are in the market to be buying a home right now, is they might not think they qualify, but they should always talk to a mortgage professional, realtor, to see kind of what their options are.
And a lot of times people don't understand, like, rather than pay $3,000 a month for rent, so, you know, you're spending $36,000 a year renting, you'd be better off buying a home. It may not be your dream home, but you're better off investing in yourself.
Yeah.
So get a lesser home, you know, a new construction maybe that's in an area that wasn't the 100% what you wanted, building the equity in that home so that in a few years you're ready to sell that home and then move up. Your starter home doesn't have to be the end-all be-all dream home that you've always wanted. You just need to start. So it doesn't matter really where you start, but you have to start somewhere.
Yeah.
And giving somebody else the rent money is really not the best place for you to start.
Yeah, and in our local area here in Brevard, I mean, on a national scale, it's still relatively affordable for what you can. I mean, I just read an article recently that in San Diego, where I'm from, over half the homes, over 50% of the homes available right now on the market are over $1 million. How crazy is that?
Good news, that is not the case in Brevard County.
Yeah.
Yeah, that is a little crazy.
Yeah, so talking about your starter homes, you know, getting your foot in the door, I mean, what could you realistically expect, like average price point in Brevard County is right now?
So different areas have different price points, and I'm not going to pull each different area of Brevard County out and say this is the price point for that area. But if you're willing to take a starter home in, different areas, you can probably get in there in the mid 200s, and it would be a fantastic home, new construction that is already ready or it will be ready soon. And they are some older pre-built homes that are available in that price point as well. That would get your foot in the door. That would get you started building your own equity instead of paying off somebody else's or building somebody else's equity. Now that goes up very rapidly depending on the area in which you choose. If you're a first-time home buyer, you need to really look at what your output per month can be and plan accordingly. Don't think that you have to be in that $1 million home to start off. You just need to start building your own equity in your own home.